Hello, hello, welcome. I am Big Cheds. Today is Thursday. It's November 11th, 2021. This is episode 10 of this brand new series on the Crypto Banter YouTube station, Trading Wisdom. So please, first of all, thank you for watching. If you stayed up late, I really appreciate you staying up for the show. Hit that like, hit that subscribe button to show your support for the Crypto Banter channel. You know, trading can be complicated, and what we're going to try to do is make it simple for you. We're going to try to simplify it for you. And the way we're going to do that is with this show. The format of the show in the beginning, we're going to do a little bit of wisdoms based on my book, Trading Wisdom 50 Lessons Every Trader Should Know. The middle portion of the program will do some technical analysis, hopefully teach you some basic skills about how to read a chart. And then we wrap it up with a guest. We have an excellent guest, Fibonacci, today. He's going to talk to you a little bit about how to use Fibonacci's. So I'm really excited about that. So without further ado, let's get this started. And Luke, let's get this started, brother. Once again, thank you. I appreciate you taking some time out of your day to watch this program. So first, I'd like to thank our sponsors. The first one we're going to talk about is Trend Spider. Trend Spider is a wonderful program if you're looking to get started and you haven't signed up for a charting website yet. Very easy to use interface, all the indicators, all the patterns. Really just a nice and easy way to get things started. There is a really nice free trial they're offering for banter folks like yourself. So please check that out in the video description. One of my favorite places to trade, of course, is at Bing Bond. It's a really easy to use exchange, safe, custom leverage, copy trading. You can trade it with Bitcoin, Ethereum, USDT, ADA, all these other things. Really easy to get started. Make sure you sign up, transfer in your crypto, and you'll get started with that. There'll be some more details in the description for the video, but I'm definitely a big fan of Bing Bond. I'd encourage you to check that out. I am on Twitter. I'm at Big Cheds. I'm a chart nerd. I'm a newbie helper. If you don't know anything about me, I am the author, of course, of Trading Wisdom. That's how I'm basically why I'm doing this show. And really thanks to the wonderful folks at the Crypto Banter channel. Go ahead and hit subscribe and then go to their playlist and take a look at Trading Wisdom, the playlist. Take a look at all those old episodes. I would recommend actually binge watching them. And I do have a YouTube channel. Check me out at Cheds Trading as well. Check out my playlists. And lastly, if you are interested in learning how to trade and in technical analysis, check out Bitcoin Live, where I am a founding analyst. And the book, of course, Trading Wisdom, 50 Lessons Every Trader Should Know. That is on Amazon. So as promised, we start out the show with some excerpts of the book. This week's lesson is Trading with Confidence. You can just pause it and read this at your own time. I'm not going to sport with your patience, but we're going to do lesson 30. Okay, page 76, right? If you're reading from home, thank you if you are. And of course, thank you for watching. Let us know how you're doing there in the comments, folks. We love to hear from you. We love your viewership, and we're happy that you're with us today. So the chapter starts out with a quote: "Trade with confidence or don't trade at all. If you are confident, then you most likely lack fear because you know that your skills will help you navigate whatever the price action throws at you. You have been through it all and are not shaken when your long breaks support because you know to wait for confirmation so that you do not get faked out. You also know what a good opportunity looks like when it comes along and are confident in your ability to navigate that price action regardless of what happens." So, I mean, how do you get there, right? When you start out something and you're brand new at it, obviously you're not going to be confident. So that's something to keep in mind. But how you get confident is with discipline, with hard work, and with study and with experience, right? You have to make mistakes. You have to learn from those mistakes. And then over time, you build up that muscle memory, right? Over time, you understand how to scale into your position. You understand how to manage your risk. And you understand, like I mentioned here earlier, for example, about confirmation. So, like, for example, you're in a long position and the support breaks. Rather than a knee jerk reaction and immediately selling, perhaps you wait an hour, or you wait for that daily candle to close. You wait for a little bit more confirmation, right? You've been around enough to know that oftentimes key support levels are swept, right? Just to kind of trigger stop losses and liquidate longs before things go right back up. It's a very kind of a common phenomena. So you want to be trading with confidence. To get that confidence, you need experience, right? And you get experience by studying hard, by keeping notes along the way, your trading journal, your trading log, by putting in the time, and you'll get that confidence over time. But another way to build up that confidence is to be prepared, right? For every individual trade. If you're just kind of bouncing around with your trades, in prior episodes, we talked about like social media, and the concept of that shiny object trade. If you're just bouncing around and you're playing whatever you see, you're probably not going to be confident. If the whole reason you're in the trade is because some other guy said, "Hey, I'm in, I like it." I mean, how can you be confident about that? Really, your whole trade is based on someone else. So, as I say in the book, study the chart ahead of time so you are ready, no matter what scenario unfolds. Otherwise, sit it out, right? Study the chart ahead of time. This is a concept we've talked about before. Whatever you're playing, whatever play you're in, it should be something you've been scouting out ahead of time. It should be something that you've been studying. You understand the key levels on the chart, right? Your job as a chart technician, your job as someone who is a trader and uses charts is to identify the trend and then ride that trend as long as it's profitable. While you're doing that, you want to have clearly marked out levels that would suggest the trend is either strengthening or weakening. That's what's important, right? You've studied the chart. You know that if we break above this resistance, I might even add to my position. You know that if it breaks below the support, I'm going to start to get more cautious. I might scale out. I might sell half my position. You can wait for confirmation, but you understand what would happen if the price goes to a certain level and what that would mean for the strength of the trend, right? As I say in the book, one great way to improve your confidence is to prepare ahead of time. If you are marking all the key price levels on the charts of your favorite plays, then you will not get spooked out when volatility arrives, right? There's other chapters in the book. I talk about being ready to buy the fear, right? And not panicking. But like I say here, so you will not get spooked out. You don't want to be spooked out because you understand, even if the price drops 20 or 30%, if it drops to a key support level, if it drops to a major demand level, you say, okay, this is a reasonable risk reward for me. Why? Because in the past, the price has found support there. It was a year-long resistance that we've broken, and now we're retesting it. You're not spooked out because you're not afraid to buy the fear, and you're not afraid to buy that key level because you're confident, because you're prepared, because you've studied the chart. As I say in the book, but more than just skills and preparation, it is that you are operating with the proper bankroll strategy as well. As we touched upon in other sections, you will need to be playing with money you can afford to lose, because then you will not allow the fear of losing money to interfere with making the right decision. So if you're in the trade and you need to pay that rent money, first of all, just don't do that, right? But if you're in the trade and you really can't take another loss, you're not going to make the right decision. You need to feel separated, hopefully some emotional separation from that money or those funds so that you can execute the proper strategy, right? You need to separate yourself from that, and you need to be confident in your ability to wager and risk your money based on your preparation and your understanding of the trend and what those key levels mean. So I have a quote in the book. I say, playing poker reminds me that you really have to not need the money in order to play the correct strategy. The minute you start thinking about losing X dollar amount, it's over, right? So if you're sitting there and you're micromanaging it, oh, I can't afford, I can only afford to lose this amount or that amount. You're gonna set yourself up for disaster. You need to play with money you can afford to lose. It's going to allow you to be confident, and don't let that money determine really your actions, and how you approach that trade, right? When you are continually trading from fear and weakness, you are bound to make mistakes you would not normally make if you were trading from strength and confidence. Desperate not to lose another dollar, you become paralyzed, and rather than seize on a good opportunity, You hold back out of fear. In order to play properly, you need to have no fear of losing money as long as the trading plan is solid and provides a good risk reward setup, right? Every trade should be thought out. Every trade you should understand where your fail point is, where your thesis would fail. That's your stop loss, right? You buy based on a moving average holding support. The moving average fails, the trade fails, right? So you have an idea of what your reason is for entering. You have an idea of where you would cut that trade. And as long as you have that, and you have no fear of losing. You have to, it's going to happen. You're going to lose trades. A lot of them. I lose them all the time. I lose 10 before breakfast, right? It's just how it works. So as long as you have no fear of losing a trade, and that trade provides a good risk reward setup, right? In classical charting, you want to have at least a 3-to-1 risk to reward ratio, price target where you think it might go based on your potential stop loss, right? So a good risk to reward ratio. We end the chapter with a quote: "Fear of losing money is the number one reason you are losing money," right? Think about that. I put that tweet out on Twitter. It really resonates. It's one of those things that people hear and it makes sense, right? The fear of losing money is why you're losing money. So let us know in the comments. Do any of these things I'm saying, do they connect? Have you experienced these things before? Does it help you to hear about them and to talk about them? So let us know how you're doing. That is from lesson 30, Trade with Confidence, in my book, Trading Wisdom, available on Amazon, of course. And thank you, everyone. First of all, Banter family, thank you. You've been very supportive, so thank you for that. I think now is the time for us to do some technical analysis. Let's go right over to our wonderful friends at TrendSpider. Let's talk about where we are on Bitcoin. Maybe we'll have time to do some altcoins, and then we'll go into our great guest, Fibonacci. So where are we at on the daily chart? So overall, it's undeniable. It's a beautiful, strong uptrend, right? And in prior episodes and prior weeks, we talked about the long consolidation Bitcoin went through, starting with that April-May high, dropping down into that 80-day rectangle, from May through July. We had the breakout. We talked about that lower high. And then we talked about the higher low, that equilibrium where you have a tightening pattern after a large move. The price needs to digest. It needs to digest large moves. So you want to take advantage of that. That often will give you the ability to take profit and maybe buy in on a dip, because your whole job is as a trader is to buy dips and uptrends. So that's how we got there: the high, the low, the lower high, the higher low, and the breakout. So on that, we have this clear level marked 53K roughly. That's the macro lower high that we would love to get a chance to buy there. Doesn't mean we're going to get there, because bulls are pretty strong, but there's clues, right? I've been looking for potential consolidation here, especially since on October 20th, when Ethereum started to break out. So you want to think about how market cycles work. Bitcoin goes on a big run, and then Bitcoin pauses, and then the money flows down, right? It flows into Ethereum, and then it flows into Litecoin, and then into alts. And we've seen that, right? As soon as Ethereum started to break out in this area, I started to get cautious, because that meant that Bitcoin is going to consolidate. We consolidated for a while. We set up with a potential head and shoulders. It never really materialized. The bull flag materialized. The bull flag broke out. Well, we didn't meet that measured move, right? You take the height, for a bull flag, and you want to measure how far it's going to go. You take the height of the flagpole, you extend it from the breakout point. That never really happened, because we're still digesting the news. We had the run up on the ETF news, and we're still digesting the fact that we have this mainstream adoption in the Bitcoin ETF. And all this price action here is in the context of that April-May high. So when the price cooled off and it bounced up again, what you want to watch for is, once a resistance level is taken, can you hold it, right? So we on 2 days ago, November 7th, we broke right back up above that high and then failed to hold it, came back below. We have what's called an up thrust, right? We broke above that prior all-time high, right? It's, the high 66K level. We broke up above it and came all the way back down, right? So we have some short-term warning signs, right? We have the fact that we were unable to hold that high at 66K. And then you have the outside bar, okay? You have the outside bar here, this candle, where the entire range of this candle eclipses eclipse is the prior candle range. It's a momentum slowing type of signal. It's a short term, a pausing type of signal. So while alts are running, right, that makes you be more cautious about Bitcoin. Well, Litecoin's running, it makes you be more cautious about Bitcoin. And you want to think about context. So while Litecoin was breaking out, Bitcoin was doing its upthrust, right? It failed to hold that level. You're seeing a little short-term weakness, and you have to understand market cycles. I know everyone wants 100K. I know everyone wants 98K in November, but moves need to be digested. We're still incredibly bullish, but it would make sense for the price to pause here at this level in the mid 60s. Pause, come back, and maybe find support at 53K or find support at the MA50. It makes sense for the price to consolidate here because we ran up on that ETF news, right? That's something you want to keep in mind. So we have some short-term warning signals. We have the upthrust. We have the outside bar. What's going to happen next, right? Well, keep in mind that key pivot level, 63.8K, right? When the price was attempting to put in the head and shoulders, that was the key level, 63.8K, that would have signified that head and shoulders failed. That was that failure point. So for now, bulls are still holding this zone, right? This is the one really key level, 63.8. Bulls are still holding it for now. If you get below 63.8K, you want to get a little bit cautious, a little bit more cautious. And then you want to watch 60K, the bottom of this level, right? So we have potential for a double top. What is a double top? Right now, you have just two tests of a level. It's not a double top. A double top is not actionable until you break through the low, right? Until you break through the low of it right here at the 60K level, okay? You have two peaks and you have the trough or the bottom of it. If that happens, you take the height, right, from the peaks down to the trough, you extend it. And really, if the double top completes, it will complete on a 60K break, and that would roughly take us right back to around 53, 52K. So you have potential for a double top, an unconfirmed double top. You want to be watching for that because we have the upthrust, we have the outside bar, we have some short-term warning signs, and you have outside the chart the fact that alts are running, right? And even some of the lower tier alts were starting to run, like Zcash and some of these other things. So you want to pay attention to what alts are doing if you are heavily invested in Bitcoin, right? What are we doing short term? We're consolidating right now, right? This is the short term consolidation on Bitcoin. Look at those Bollinger Bands. Bollinger Bands tell you when you should be expecting volatility. After the price moves in a tight range for a long period of time, these Bollinger Bands catch up and then they get tight. You have that Bollinger Band pinch or the Bollinger Squeeze. That suggests that we are going to leave this trading range. What's the range? 65.5 down to around, 64.5. We are most likely going to break out of this one way or another soon. Okay. Trends tend to continue. You have a big bearish move, and now we're consolidating that. It's most likely that we will continue down another leg. If we continue down another leg, you kind of zoom out. You keep an eye on those zones that we talked about from the daily time frame, 63.8K, and then of course 60K, right? So yes, Bitcoin's bullish, but it doesn't mean that there's not going to be profit taking. It doesn't mean that we can just ignore other signs that are going on, Litecoin running, Ethereum running, and now a lot of the altcoins running. So those are kind of my thoughts, basically where we are on Bitcoin right now. Let's jump over to my man Fibo Swanee and see if he's ready for us. How you doing, brother?
Hey, Big Cheds, what's up, man?
I'm doing great. I'm just
Awesome.
hanging out. Really glad you could join us.
Yeah,
And
you
do you have your
bet. Thanks for having me.
screen ready to show us a little bit later as well?
Yeah, I'm ready to go.
All right, excellent. So why don't you just introduce yourself to the audience? We'd love to hear a little bit about you, what you do, and just tell us about yourself.
Yeah, sure. I'm a 20-year uh, experience in commodity markets. I got out of college and I went straight into commodity trading. I started out with cattle and grains, futures and options, and I traded that for about 6 or 7 years. Started a hedge fund with a few guys for about 3 years and started to have a family, and it was just too much time, so I sold it and moved on.
The family
Uh,
or you sold the
no,
family?
I did not sell the family.
Okay. It was unclear. It was unclear there. I had to find
No,
out. Yeah.
yeah. And then after that, I went into the energy space, and I've been a head commodity, basically a head TA guy at an energy consulting firm for about the last 17 years. And I'm basically doing technical analysis for commodities all over the globe today. So That's what I do for a living. I'm at my day job, and I moonlight helping people with charts, just like you're doing, which is awesome. Thanks for doing that and getting the education out there for people learning technical analysis. I think it's awesome. It's definitely a passion of mine. I've been doing it for a long time, and I love it. But I lean toward Fibonacci and kind of went down the rabbit hole over the last couple of decades and learned to use it in many different ways. I won't go into in depth today. I'll do a little bit more basics, but there's so many different uses that you can use Fibonacci for. I mean, everything from validating other strategies that you have to making your own strategy based on fibs. So you can do many different things with it. So that's me. I've been doing this for a long time, and I'm happy to be here.
Well, we're honored to have you. You sound like you have a lot of experience, and we're trying to make the show educational. We want people to learn. So I'd love to hear from you a little bit, about the Fibonacci's. Maybe, walk us through that.
Yeah. Let me share my screen. I got a couple little slides here I want to show.
Okay.
Let me see which screen it's going to let me show here. There we go. Sorry about the delay there.
No problem. Let's go right there, brother. All
Should be
right.
popped up right there.
Yeah.
Let me put it in present mode so you can see it. I'm starting out with the very basics here. I'm starting out with the actual Fibonacci sequence. So a lot of people probably see Fibonacci on charts, but where do those lines come from? What do they mean? So I'm going to start out with the sequence. And if anybody doesn't know, I put the formula on there, but it's basically just adding 1 and 1 and 2 equals 2. 1 plus 2 equals 3. 2 plus 3 equals 5. 3 plus 5 equals 8. On into infinity. There's a lot of things you can use the sequence for. I use them for a lot of different timing analysis, cycle analysis, a lot of different things for moving average, crossovers, different things that I use the Fibonacci sequence for. But that gets into like 200, 300 level type stuff when it comes to Fibonacci. But the main thing is that I want to talk about today is where the ratios come from. So if you look at the sequence of numbers and you take any two numbers along that line and you divide them into each other, and I'm just using an example of 144 to 233 right here. Phi comes out to be 618, and that's when everyone talks about that golden ratio of that 61.8%. But where do the other ratios come from? Well, if you take any number along the sequence and you go over two numbers, and I use down here as an example 144 to 377. If you divide those into each other, you get another ratio. So, and then if you do three numbers over, you'll get another ratio, and so on. And that's where these ratios come from. So when you're looking at the golden ratio, 61.8%, that's the granddaddy of them all, I guess you could say, when people are kind of looking for that major support or resistance in the market. But the question is why do we even use this in charts? Why does this matter? So this is where it gets a little controversial and a little fun, but let's go on here. On this next slide, I don't know if everybody's seen this spiral out on different websites and different deals, but the Fibonacci spiral is the 1, 1, 2, 3, 5, 8, and it spirals off into infinity. So the interesting about that is Fibonacci is in nature, and this is where it starts, and this is where it gets kind of controversial, but believe me, I've been doing this for 20 years. It works. If you look at a sunflower and if you pick up a sunflower, you can see it's all based on Fibonacci spiral numbers. If you're ever out walking out in a park, pick up a pine cone and look at one and go clockwise, and you'll notice you'll get 8 going clockwise and you'll get 13 going counterclockwise. So it's just kind of interesting that you see it in nature. You also see it in music. If you look at a music scale, you got 2 black keys and 3 black keys. I'm just looking at a piano here. 2 black keys and 3 black keys that make up 5 black keys. And then you have 8 white keys that make up an octave. So if you add them all together, it's 13. So you got 2, 3, 5, 8, and 13 all in an octave of music. So you got this pattern that's being built even in it, that musicians use to create music. Then you get to the human body, and our body is actually built based on Fibonacci levels. Like our bottom half is the 61.8%, and the other top half is the 38.2. Not everybody's going to be measured exactly like that, but that's where we're kind of broken down. So here's where it jumps to the markets. If it's in nature And human nature is what's behind markets. You talked about fear and greed, and people trade off of fear and greed. That human nature comes into the markets, and that's where the Elliott wave formula kind of comes in, and a bunch of other things. And that's where you get this jump from human nature into the markets. And then that's where people create patterns, and one of them could be an Elliott wave. That's what I used as an example here, where you get the 5 waves to the upside, you get a 3-wave correction, and then hopefully if it holds, you get another 5 waves to the upside, and you get 13 waves, or 13 altogether. And then each one of these waves can be broken down into 5 and 3, and then you get smaller and smaller. So everything's kind of fractal in nature. So that's where a lot of this Fibonacci comes from, is that big leap from human nature into the markets. Because if you think about it, I know you took the CMT level 1, correct?
Yes, sir.
And I'm pretty sure you learned the 3 tenets of technical analysis, and the third one is history tends to repeat itself. So people are creating patterns either consciously and unconsciously. They just don't know that they're even doing it. People like symmetry, so they want things to, when things start to get out of whack, they want it to come back into whack, basically. So they like symmetry. So that history tends to repeat itself means that it's the people and the patterns it's the people that are creating the patterns in the past that are the same thing that's happening in the present. So if you go back 50 years, people are trading whatever market off of fear and greed, and they're creating these patterns. So when that history tends to repeat itself, it's the human nature that continues, and they keep creating these patterns, which kept me employed the last 20 years. Because as long as people keep trading off of fear and greed and that emotion, which we teach not to do, we try to get it out of emotion as much as possible, but we're humans and it's going to happen. And we just kind of try to live with it and try to maintain it and keep your good psychology in your head and all of that. But what happens is the markets are made up of many, many different people and companies and who knows what. So those patterns are being, just over and over again. So when you go back and you do an analysis historically, if you got 30 different trend line breakouts over the last 5 years or something, and you're looking, and 28 of those out of 30 break out to an average of 7%. Well, you got a pretty high probability that it's going to break out to 7% based on the historical people that are actually trading this market. They're all looking at it back historically. So a lot of people say, well, maybe it's just self-fulfilling prophecy, which I do believe that's part of it. But then there's also, when you do really in-depth analysis on some of this stuff, you will find patterns that are not on the surface that people will be just like, wow, this is incredible. But of course, there's a self-fulfilling prophecy. If you take the ultimate high and the ultimate low, and I can show on
yeah, let's do a real quick one. Let's just do a real quick first.
Yeah.
Show us what you got, brother.
Yeah, I'm just going to show real quick. If anybody hasn't really used fibs, if you go over in TradingView and pull up the fib retracement tool, I'm just going to do basics here on the top and bottom here. Take the exact high, work down to the low here. Whenever you start, it'll always be the 100%, and you want to work down because you want to look at what the counter trend is to the trend. So if you're going to the downside here, yep, in this bearish trend, you want to know what the retracements are going this way. Mm-hmm. So an interesting thing here, I'm just throwing this out, and I always like to throw this out to somebody too. If you're looking at stocks or whatever, just pick one and just do this on a chart, on a weekly chart. You'll be amazed on how many times you'll see the market retrace back to the 61.8% level right here, like it did in Bitcoin at this point. So, and then of course it can work the other way. If you go in this direction, going up this way, you can work to the point where it hit the 61.8% level right here. Yep. And you talk about filtering or I call it filtering, but you might call it confirming a break. Yeah. I think I watched you a couple of days ago, and you liked 2 days beyond something or something along those lines.
That's a conservative way. I think it's valuable. Yeah.
Yeah. And that's good. I actually look for whatever time period I'm looking at. I want to see 3 consecutive time period closes below the line. So if the 61.8% level right here is at 72.31, if you go across this line right here, you can see it wicked down and had some candles underneath it. but not 3 consecutive candles in a row. Or a percentage move is also like this big red candle broke down. But once you broke this, you can go the other direction. So that's one way of looking at Fibonacci retracements. Another interesting way to use them is extensions. So just like this big move to the downside,
Mhm.
I also like to look at going this way from a low to a high, and then you break the 100%. I look at the 127 to 141 as an area of buying on an extension beyond the 100%. And as you can see, it wicked down here a couple times and then it went back up. So that's another way of using fibs, is also on an extension basis. Because you can also do it back here on this one, where you went up to this point here and
Yep.
it broke the 100%. And then this range down in here is the buying zone, or maybe your order block area, or whatever you want to call it. Just an area of where a lot of people are buying and selling and kind of consolidating, and then it pops to the upside. So just different ways of using it, but this is just a very basic way. If you ever want to start using it, just kind of get a good feel for it. Go to your absolute high, go to your absolute low, and get a feel for where some of these levels are hitting support and resistance, and watch the markets on how they react off of them.
I love it.
And you get it from that point.
I
And then
love
if
it.
you want to get even further, then you can go into some really interesting stuff, but we can get into that another time.
Yeah, let's do it
We can
another
actually,
time, but I think
yeah,
that's
yeah,
a
you bet.
really good basic primer. Where do you but with real quick with Bitcoin, are we, with your analysis, where are we at with Bitcoin? Just give us your, back of the napkin thoughts here real quick.
Yeah, yeah. I mean, right now with my stuff, I'm looking at so my fib model right now is showing support at 64.8,
Okay.
and we're kind of whipping back and forth around that average at the moment. The last day or two, or maybe a couple days, maybe. But right now with my model, I'm still holding the bull zone, but it's really still in consolidation. So it's kind of I'm a cautiously optimistic right
Yeah.
now.
Yeah.
So I'm holding on to my longs because my model's still saying that I'm in the bull zone based on the stuff that I do. But you got to be cautious, because if it does break down, if I get 3 consecutive settles under 64.8,
64.
I'm going to be looking at probably 62.2 as an area to go to, and then maybe even back down to 59.2 if it even gets kind of crazy. But that 59.2 level is my critical support. If that breaks, then we're in for a much larger correction. But right now it's holding really well at the support, and we're consolidating. But I'm in agreement with you looking at some of this. If the trend's down and you're consolidating, it does lean toward that way. But I'm staying cautiously optimistic because I'm slightly bullish on my models at the moment.
Just before we go real quick, do you look at like what the other alts are doing? Given the strength in like Ethereum and Litecoin, that makes me more cautious in Bitcoin. Do you have a similar type of thoughts on that, or?
Actually, I'm a little old school. I look at every single one of them individually,
Hmm.
because I look at it as there's different people and different ideas going into buying and selling for every market, so it might change things based on that. But yeah, there is generally if you do some cross analysis between Bitcoin and some of the alts, if Bitcoin's going down, some of that money might be moving into alts and those kind of things. So I kind of look at it that way. But I'm old school. I look at everyone individually and just take each chart the way it is. And right now, Ethereum's still in the bull zone, and I just bought at 58, or not 58, 45,
Hmm.
90 yesterday, because that's right where my shallow Fibonacci level was, and it was matching my model. So we bought right there. So I'm still supportive on ETH. So some of the other alts have broke down into some bull zone, or into some bear zones. So I've kind of got out of a few of those, just waiting for a new bull zone to come into play. And that's all based on my Fibonacci models that I have. When I'm saying zones and that kind of stuff, that's just how I look at things. So
Well, just reading from the chat room, looks like there's
yep.
people are loving the knowledge that you're giving to us. We're really
Awesome.
appreciative of it, and we'll have to bring you back to do some more of this Fibonacci stuff. Just people seem to really love it.
Yep, that's what I'm here for, man. Just to help educate, and that's what I'm glad you had me on to, just get it out there and let people mess around with it and see what they can do.
Where can we find out?
If anything, use the Fibonacci if you got a strategy, use it as a secondary tool to kind of give you some confidence, as you talked about earlier. If this Fibonacci line's matching up with your moving average or your whatever strategy you're looking at, maybe it give you a little bit more confidence to say, hey, maybe that support will hold, because there's just another evidence there that there's some buying interest coming into this market, that kind of
I
thing.
love it. I love it. You're Fiboswani on Twitter. Is there anywhere else we can get a hold of you?
Yeah,
Or
I mean, Fiboswani on Twitter, Fiboswani on TradingView. You can go to fiboswani.com, check out my website, whatever you want to do there.
it's awesome, man. We're here at the Banter family, really happy that you took some time out of your day to come talk to us.
No problem, Big Cheds. Thanks for having me, man. It's
You got
awesome.
it, brother. We'll talk to you soon. All right.
All right, take care.
Take care. Guys, that was wonderful. At this Banter channel, we get just the best guests. We have a great team. We get great guests. And that gentleman is no exception. Hit that like, smash that like button, smash that subscribe button. I just want to quickly remind you of a couple things before we go, a couple housekeeping items. Please do check out TrendSpider if you're interested in learning. If you want to looking for a charting website, very easy to use interface, uh, indicators, patterns, really great. Check them out. And if you're looking for somewhere to trade, check out Bing Bond. Um, Custom leverage, copy trading, if you're into that, really easy to use, safe and effective. For both of these folks, check out the description for the video. There'll be information about how to sign up for them. They're doing some special stuff for the Crypto Banter family. I am on Twitter, of course, at Big Cheds. Give me a follow if you're interested in that. The book, Trading Wisdom, available on Amazon, paperback, hardcover, and Kindle. I do have Audible version coming soon. Hopefully, folks will check that out. Also, very important, go to the Banter YouTube. You hit subscribe, go to playlists, and find the Trading Wisdom playlist. Binge watch every episode. We're making them for you folks. We're trying to make trading easier. And then obviously find me on YouTube at Cheds Trading. Hit subscribe if you like what I'm doing. And if you'd like to learn how to do technical analysis, Bitcoin Live, best in class educational platform for crypto. Information is in the description. I am Big Cheds. I am honored to be here. Thank you for staying up. Good morning, good evening, wherever you are. And until next time, Big Cheds out.